Namaskara guys, this is Stock Yatra and we are looking at the series of lectures on the basics of the Indian stock market, and we've finished 3 video lectures so far. We'll move on to the 4th video lecture where we'll be discussing the different price determinants and the timings of the Indian market. So the price determinants that are the factors that cause the share price to move up and down. As we saw, the basics, supply and demand is the most important factor. Apart from this, there are different market indicators. Market indicators include the different volume, the varying investors, number of investors, number of buyers, number of sellers. All these are all market indicators, and you have the confidence index. If a person has a higher confidence, or if a group of people have higher confidence in the share of a particular company, they're going to invest in their company. So this increases the demand for that price, that share, and the price is going to go up. And like we saw, wars and other conflicts or global and national crisis, they also decrease or cause a fall in the market. We have concerns over inflation or deflation, which is also an emotion that plays in the market. Then we have the government fiscal and monetary policies. For example, if the government provides or brings in new policies in favor of electric vehicles, the share prices of the companies that manufacture and deal with electric vehicles are going to go up. Likewise, with change or increase in the advancement in the technology, the companies that benefit from these advancements in technology, their share prices are going to go up. Natural disaster is just like global and national crisis. Corporate or government performance data, the performance of each company will matter in the demand and supply. A well-performing company with higher profits will attract more investors, and the share price is naturally going to go up. I'm sorry. Then level of trust in the financial sector. This is again indirectly the confidence index. Then we have the regulation and deregulation. Indirectly, it's the government fiscal and monetary policies. Level of trust in the legal system. More safety and more risk-free environments for people to invest in. More number of investors are going to drop in. That also determines the price of the different shares. And just like Master Yoda says, may the force be with you and guide you into good investments. Now we look at the timings of the Indian stock market. Majorly, we will be discussing the Indian stock market. So the Indian stock market opens and closes at 9:15 and 3:30. 9:15 in the morning and 3:30 in the afternoon. So approximately 6 hours and 15 minutes of a day. The weekdays, so market remains closed on Saturdays, Sundays and public holidays. Of the weekdays, 6 hours and 15 minutes is open. We are free to place n number of trades in the between the market hours. Now we have two different sessions apart from the market hours. One is the pre-opening market session, the other is the post-opening or the after market hours. Now the after market hours is actually divided into two different sessions. One is from 3:30 p.m. to 4 p.m. This is what we call the post-market session. In this, what happens is we are not able to participate. Only the brokers are able to participate on our behalf. In cases of short sell, we'll look at what is a short sell later, and then we'll be discussing about post-market session together with that. The after-market session is from 4 p.m. of that day to 9 a.m. of the next day. This is what we call the after-market hours or the after-market session. Here what happens is we are free to place orders. But since the market is not active, these orders are not matched. And hence they do not get executed. We are able to place orders, but we are not able to make active trades or make the orders get executed because the markets are closed during these hours. Now coming to the pre-opening market session. Now the pre-opening market session is between 9 to 9:15 in the mornings of of every day whenever the market is open. This pre-opening market session is again divided into 3 different parts. From 9 to 9:07, we have the order placement. Just like the after market hours, we can place orders in this bracket, that is the 7-minute bracket. After this, between 9:08 to 9:11, what happens is we have the matching of orders. Just like how matching of orders takes place during the market hours, matching of orders that were placed during the aftermarket hours and the pre-opening market session will be matched between these 3 to 4 minute window period. Post this, from 9:11 to 9:15 or 9:12 to 9:15 is what we call the stabilization period. This is because the market is open only for 6 hours a day, which is approximately 1/3 or 1/4 of a day. The remaining 3/4 of the day, we are placing orders. But these orders are not getting executed immediately. They are being executed in a small time frame of 3 to 4 minutes. So this will cause a huge fluctuation in the share price. To avoid such a huge fluctuation in the share price, at the opening of the market, we have this 3-minute period where orders cannot be placed. They cannot be placed. This ensures that there is very little fluctuation at the opening of the market at 9:15. That is why we call it the stabilization period. Now, based on what price the market opens the next day, we will have 3 different scenarios: gap up, gap down, and unchanged. Just like the name says, if the market closed yesterday at a lower price and opens today at a higher price, it's called gap up opening. The vice versa is same for gap down, and unchanged means that unchanged, the price is gonna open at the same price, the market is gonna open at the same price. Now this unchanged is a rare scenario as mentioned here, because the market is very rarely going to open at the same price it was at before. Apart from this, with Diwali coming ahead of us, we also can look at the Muhurat trading hours. This is an auspicious time for trading. Just like most of our Indian household sentiments are linked with auspiciousness, we tend to invest in new assets or take any new ventures during auspicious times. And for most of the Indians, this auspicious time is during Deepavali. And happy Deepavali in advance, folks. Most of you would be paranoid about bursting crackers, but I would say crackers are not very anti-environmental, because most of us travel single in a car, which adds so much to the air pollution and so much to the carbon footprints that bursting crackers in one day will not. So those of the November special environmentalists and animal activists, please don't stop Hindus from bursting crackers. That is my one sincere request. Moving on, we'll look at what is the Muhurat trading. We have the pre-open session, trading and post-close session, just like every time. This Muhurat trading is a 1-hour trading session that happens only on the evening of Deepavali. For 1 hour, the market opens so that people who have an auspicious sentiment, they can able to buy, at least for the namesake, a small quantity of shares. That is why the market opens specially on the evening of Deepavali for 1 hour. This 1 hour is between 6:15 to 7:15. Just like we have the pre-opening market session and post-opening market session, we have 2 different sessions here, which last for maximum 15 to 15 minutes. With that said, we'll also discuss the market hours of the major countries. Of this, the Japan and European markets actually fall somewhere between our Indian open market timings, and these two are going to affect our market during the open market hours, and USA is going to affect our market on the next day opening, because they are around 10 to 12 hours behind us. Their influence on their market will be during the Indian night time or midnight time. So their effect is going to be witnessed only in the next day opening session. So they might cause a gap up, gap down opening, depending on if the news is positive or negative. With this, we will be ending our fourth video. Do like, share, and subscribe to Stock Yatra and hit the bell icon so that you will be updated with our next series of lecture videos. So stay tuned for the fifth video. Thank you very much. Jai Hind.